Hello, T3 Live. This is Andre Siena coming to you from the Big Apple today. I am in New York this week, and I wanted to get an opportunity to record a little video for everybody and show you in picture some of the plays that I call out in the radio so that you could get a little bit of a better understanding of my thought process and what I do when I'm talking with everybody on the radio. I had a chance to attend Laz's presentation this weekend, and it was a great seminar for those of you that were there. And hopefully I can sort of tie in my thinking into some of the discussions that he went over there so that we can kind of get a coherent approach to a lot of the plays that we look at. I haven't been too active this week here in the office because I've had a lot of other things taking up my time, but I wanted to go over one play in particular from last week that I think a lot of you were able to catch. That was a really good trade, and then in addition a few trades from today that might be of interest as well. So let's go to the charts and get started. The trade in particular that I was thinking about was this CCJ. And CCJ back on the 16th had a particularly large drop. And this was when the whole kind of world was falling apart with the Japanese nuclear meltdown and all of the news coming out from Japan. And at the time, the news was that the European Minister of Energy, I forget exactly what his title was, said that the situation was much worse than was being said. Now, he didn't have any particular information that was new or better than what the rest of the market was seeing. And so at the time, it looked like a particularly good trade as a reversion to the mean, which goes back to what Evan was saying this weekend. And so if you just focus on the technicals and not on the panic, you could actually spot a really good entry in the CCJ, because at the time, and this chart that you see up here on the screen is a tick chart. And the reason that I'm using a tick chart is because the entry can actually be very fine-tuned using a tick chart. And this is not something that I think people typically talk about here at T3 Live, but in this particular instance, I think it was valuable because, and we'll zoom out in a second, but it's a little bit difficult with eSignal to start from the zoomed out and move here. So I want to start with the tick chart. This stock was very far below its 21 and 8 period exponential moving averages on the 5-minute, the 15-minute, any of the other time frames, and therefore it was definitely due for a reversion to the mean trade. However, if you drill down into the tick chart, this is a 100-tick chart, you can see right down here in this area here, I'll use a line to kind of bracket it out. Right here at the 25-cent level, this is 30.25, it kind of formed a little wedge. Now in this particular first instance, it broke down and didn't actually work to the upside. But on the second touch of the wedge, the resistance was broken. And what was happening here, if you were paying attention in your level 2s, was that a very, very big seller was still selling the stock. And by this time, the rest of the nuclear stocks had already rapidly advanced to the upside, and the news was not really viewed as all that negative at that particular time. And in the radio, you might have heard me say that this was an overreaction. So I was very, very interested in what was happening at this level. And since we can't drill back and look at the level 2, the tick chart is the next best alternative. And a lot of the times when things are moving very rapidly, the tick chart presents chart patterns that are not readily apparent on larger time frames. And this only applies to stocks that are moving very, very rapidly. Typically when there's panic such as this, that's when the tick chart becomes valuable. And you can see as soon as the 25 level was broken, you had an explosive move to the upside. The volume at this time was massive. So it was very liquid, very easy to get in and out of whatever size you wanted. Now, I wouldn't recommend taking a trade like this with too much size because, of course, like Laz said in his presentation, a reversion to the mean trade is inherently a high-risk trade in that the downside can be dangerous and you have to be ready to get out. But nevertheless, this trade was very good risk-reward. Even if you happen to get in on the first touch here of the 25-cent level, it really only moved down against you a quarter. Eventually, this stock managed to go up a good amount. I mean, I think it was nearly a point. I'm trying to, here we go, scroll it over. And this all happened within the context of 4 minutes, maybe, something like that. So very good risk-reward trade, something I wanted to make sure I touched upon while I was here. And I'll just quickly show you what the 5-minute looked like at that time on that day. Here you can see the explosive move to the downside and how the difference between the price and the EMAs is very, very dramatic. And therefore, very poised to make a move back to the upside. All right, going to a couple of stocks that I was looking at today. The silver stocks were particularly interesting. I don't trade the commodity as much as some of the other folks here, but I do like to trade some of the individual names. And CDE and SLW are two of the ones that are of particular interest to me. And both of them, as you can see here, this is a 5-minute chart, were sitting comfortably above both their moving averages all day. On the silver Wheaton, we had a nice little ascending triangle form right at this level here, which presented a nice breakout opportunity. As you can see, it consolidated, waited for the moving average to catch up to the price, then broke through a nice round psych level, which is the whole number. I like to call it a psych level, and continued higher. That would have made for a very nice continuation trade. Even if you missed this whole move in the morning, you could have still caught it later on, made a good trade on it. The CDE, I think, was the one that I traded a little bit more. And I was looking here at this pullback. You get a nice tail right there, not too far from the moving average on the 5-minute. If you drill down to the shorter time frames, you would have seen some good entries in that neighborhood. And then again, once it broke this level here, you get continuation. Again, these are all intraday trades, cash flow trades, very solid trades in the direction of not only the intraday trend, but a longer-term trend as well. If you zoom out on any of these, you'll see that they've been on a steady climb and have, you're trading in the direction that they've been moving for some time, which presents some very good profit opportunity. And lastly, well, not lastly, actually, I have two things I wanted to go over. The ag sector was also a particularly interesting sector today because although it's been a little weaker on the daily time frames, as you can see here, or at the very best mixed, today they actually strengthened quite early on the day before the market, and therefore they had a good amount of relative strength. This is the potash. Let me type up start with the CF actually, because the CF was the strongest of all of these names. It never even went down today. Started strong, held up, waited for the moving averages to catch up, slowly continued higher. I was not able to get into the CF because I felt it might have been a chase. So I looked for entries in the potash. You have, again, another similar situation here. A little pendant forming. These are very similar patterns to what Redler speaks about on the daily charts, but they just work on the intraday. Again, you wait for those moving averages to catch up. You know the sector is strong. You know it's strong relative to the market, and therefore you know you're on the side of the relative strength and the trend in that particular stock, that particular sector. Makes for very nice trades on a cash flow basis as well. Now, if you want to hold these for a little longer because you think they have further potential as well, that's perfectly fine too. But you're controlling your risk on the shorter time frame a little more carefully, and therefore your risk reward can be very favorable. Mosaic and AGU are the other two that I pay attention to. It's a little tricky for me on this screen to show you everything because I like to look at these stocks next to each other all at the same time, but hopefully you get a sense for how quickly they took off this morning relative to the market. What are we looking at here? Let's see, we're still on the 5-minute. Again, you get bottoming tails into the support area, and boom, it takes off again. This is very much in line with the seminar this weekend that Evan was talking about. You look for those pullbacks to the moving average in the direction of the trend. That's where you look to take your entries. Now, some of you may know that I talk a lot about filters in the radio, and I wanted to try out a filter today on Finviz, which is a site that's free and available to everybody, to see if I could replicate some of the thought processes that Evan was going through on the daily charts. And one of the filters that I thought stuck out in my mind that could probably be done on that site is a stock that's moving rapidly down towards its 200-day moving average from the upside and is diverged, or rather far away from its shorter-term moving averages, meaning that it's got a reversion to the mean trade and, more importantly, at a potential support level. So the idea was to look for stocks that are below their, I think I did 20-day moving average by a certain percentage, but right above their 200-day moving average. And one came up in particular that looked interesting. It's a stock I've never really heard of before that I can think of. It's XXIA. And if I go to the daily chart here, you kind of get a sense for it. Let me see if are all the proper moving averages on here. These are simple moving averages. So this blue line is the 200-day simple moving average. But if you look at an exponential moving average, it's actually right here. And in addition to the moving average being pretty close, you also have this nice level forming there. Now, the reason that this trade looks interesting to me on the long side is because it's got pretty good separation here from its shorter-term moving averages. There is a 200-day exponential moving average sitting just below this level. It's already bounced off of this, what's the low on there? 1472 once. It's come back down to it today on the intraday time frame. You can see that it pretty much just stalled out there, didn't do anything. So you had a very, very comfortable entry and an extremely, extremely high risk-reward ratio. I don't know if the probabilities on this trade are particularly high, but I do know that my risk is 10, 15 cents, and I think this is a potential multi-day trade with easily a 50 cent to 1 point reward. Now that is a phenomenal, at least 10 to 1 risk-reward ratio. I don't care if the probabilities on that trade are low. I'm going to take that trade and give it a shot to work. And this is, again, found using nothing other than FinViz to do a very simple screen. And it came up with, this is probably the best setup that it came up with on that particular screen, but you can do this at home. You can do this right from your web browser, and it's really simple. Hopefully you enjoyed these charts and getting a little bit of a closer look into the thinking. I will be taking off back to LA, so I'll catch up with everybody on the radio then. Till then, take care.